Hello folks, welcome back. This is our midweek review for week ending January 24th, 2020. Alright, so we have our Wednesday economic calendar behind us. Tonight, as a reminder, we have employment change and unemployment rate for Aussie dollar at 7:30 New York time. So that may be something for you to watch tonight in Asia. Moving into tomorrow, we have high impact main refinancing rate, monetary policy statement, and ECB conference in the New York session. And 11 a.m. we have high impact crude oil inventories. Again, as I mentioned, Canadian dollar will be sensitive to that. All right, and you've already seen and heard about Friday's economic calendar over the weekend. We'll be looking at dollar CAD in addition to our typical dollar, euro, and cable review. It's our dollar chart daily. All right, you can see our bounce off of the fair value gap, as I mentioned in the weekend review, and now we had the market run just a little bit higher into the 2018 high. We gave up the ghost and came back and filled in almost about 90% of the fair value gap here, this BISI. I like the fact that we've had a wick here, came back up, we wicked down. I want to see it show willingness to want to go higher. It probably will not do so until late London, if not at all until New York session. Buy sell liquidity pool is still the ideal scenario for the upside response on the fair value gap. So we're looking for a continuation above that 97.85 still. Dollar on the 60-minute time frame, you can see we have a fair value gap in here. Initially I had this little tiny one in here. I wanted to watch that. I was looking at seeing what we get there, if at all. Came all the way down into here, which was, in my opinion, not necessary, but it did. So we had to take that in consideration. Came back down, almost touched the top of the fair value gap again in here. And I want to see price stay above this low. Now, if we go below this low, they may need to come back in here and clean up some of this and touch again the top of the fair value gap that's on the daily chart. So we'll see if that's going to be a catalyst for the dollar index. A lot of buy side liquidity still rests above us. You can still see that in the form of the 15-minute time frame here. We have relative equal highs, and I want to see price try to make a willing attempt to get above that 2018 97.71 old high. You can see how we worked inside the fair value gap from the hourly chart. Didn't quite come all the way down and closed it. We do have price coming off of a bullish order block in here, and inside this area here, if we don't go back down below the fair value gap on the hourly and we stay above this low, I like the idea of coming back into this order block here around 97.50, which is also institutional mid-figure. Maybe that might be a catalyst to send price higher tomorrow. It can stab through it and then come back and still reclaim that 97.50 order block. So don't be discouraged if we go below it and then eventually through tomorrow's New York session trade back above it. If it comes back down into this area here, I would consider that a area to rebuy. Or not necessarily buy dollar, but you know what I'm saying, looking for further weakness on the foreign currency front. Moving into euro dollars is our daily chart here, and sell side liquidity pool has effectively been ran out. Next sell side liquidity pool is here, and then we have the BISI, which is the draw on liquidity, I think is still in motion. What changes that scenario here is if we go above the mean threshold, in this case 111.40. If we get above that, near-term bearishness for euro dollar has been removed, in my opinion. Doesn't mean that this is completely out of the question of whether or not it's going to be down here eventually. It just means that for the near term, that means, you know, every time we talk, I would be looking for bullishness if we trade above the mean threshold of this bearish order block. On the hourly for euro dollar, just revisiting the idea that I showed you on the forum the other day. I sent you a chart. I don't want you thinking that I'm going to be doing this all the time. Okay, when I feel inspired to do so, I will do it. but because of the market context and where we're at right now, I just wanted to give you something to look at and study, and I drew your attention here for the imbalance, and the low end of that gives us the opportunity for this return. The gray line in here, this is just, again, drawing your attention back to what I posted, an update on the chart that I posted. I gave you all the fair value gap prior to this run back up in here. We always use the low of the fair value gap when we're trading up into it. That's our initial consideration for an ideal trade. And the level that's here is the 62% retracement level relative to the high and the low. That's what that gray line is. Market came back down, ran another level of sell-side liquidity that was formed with this bounce in here on Monday. You can see we're just hanging around this level here. This is a New York session return into the fair value gap, and again the gray line is the 62% retracement level relative to that hourly fractal. I don't know where we want to go from here. It's just really uncertain ahead of the ECB tomorrow. It can run back up into and rebalance to this price point right here. Close that in. If it gets a little overzealous and trades back above the very last candle here that makes the bearish breaker, we have consecutive down close candles. So even though this is a little bit higher than I'd like to see it trade to, it would still be inside of the bearish breaker. So we could run these relative equal highs, hit that, and then we can get a response if the dollar wants to rally. Frankly, I don't know. Okay, so I'm playing it by ear, and the scenarios that we're seeing right now are typical of January price action. Moving into British pound, this is our daily chart. This is our fair value gap in here that we've had. Sell side liquidity pool untapped, buy side liquidity untapped, and we're just basically still inside of this dealing range in here. I'm not too sure what it wants to do. As I mentioned on Twitter today, it remains a mystery. I don't know really what it wants. And just for note-taking purposes and for journaling, the fair value gap is shown here. Consequent encroachment, institutional order flow entry drill. The low in here. If we get to that low, we could be a buyer. Price runs into it, returns back to a bearish candle, which is a bullish order block with a fair value gap. Then price has displacement on the upside. I don't know, like I said, if it wants to get all the way back up to here for buy side liquidity. I just simply don't know. So I'm sitting on my hands with no opinion really whatsoever with British pound, and you can see a close-up of that consequent encroachment. It worked a lot of time in here around that midpoint of the fair value gap from the daily chart. I just simply don't know. Okay, so our focus today relative to the economic calendar was the dollar CAD. I mentioned that we would probably see a lot of excitement and energy in this day over the weekend in our weekend review, and here we are. So we have really large bullish candle, traded back up into bearish order block. All the SIBI's been rebalanced, traded up into it really handsomely. This candle here defines the dealing range. So it's the low of that candle and the high of that candle, and then all these subsequent candles and days have been inside that range. So while we do have a smaller dealing range high in here, I wanted to take your attention back up to this one because it's all inside of this one single daily candle. If this continues, okay, if we do see dollar rally eventually and have a sustained rally, and if dollar CAD follows suit, I like the fair value gap that's in here, which is also mean threshold of the bearish order block, and then we have bearish order block coupled with a fair value gap as well. So those are two levels. I don't have it noted here, but I have this one here. If we do again see continuation on the upside, those are the levels I'm looking for the daily chart. With really no time horizon, so I don't have a time limit on that. It's just open-ended for now. It may not do it at all, really, to be frank with you, but I'm just saying that for completeness sake, that's what I'm offering for right now. All right, so yesterday I tweeted 130.45. It's a noteworthy level. Obviously, everyone that's familiar with me knows exactly what's below that. It's a liquidity pool, relative equal lows in here, and we have relative equal lows here as well. So it dipped down below that in here. I mentioned yesterday also that it could stab down if we get a lot of excitement to 130.30. It was unable to do that, but it did clear 2 pools of liquidity and then showed a sharp response there. Buy side liquidity obviously on that lower time frame, multiple daily highs. That's what this level is here. Again, go back and listen to what I said about the daily chart for dollar CAD, and you'll see what I'm talking about in reference to this line here, that all of the past several days, the liquidity is resting above that. And here's that daily bearish order block. It was the opening price of that particular candle. That's what you're seeing here. Trade up into that beautifully, really handsome price action there. Moving into the 15-minute time frame, you can see the price action. I'm going to zoom in on a 5-minute chart here for the London session and the New York session so you can get the details. But the liquidity pool over here at 130.45, that's what's been cleared here. We see that with a New York market reversal. And here's the London Open kill zone. We have optimal trade entry in here, mean threshold, bearish order block, trades off, mean threshold again, sells off, and using your fib, we have the 127 and 150 levels in here, and beautiful, really handsome objective going into the 5 o'clock. You can see the relative equal lows over here. So sell side liquidity pool resting below here, aggressively ran through, removed all of that liquidity, and made its way into the New York session. And here's the New York kill zone in here. Market trades down below that 130.45 level again, as I tweeted yesterday. I said we'd be making an attempt to run those highs, and the highs were again the multiple series of daily candles that were relative equal highs. Creates a buy side imbalance, sell side inefficiency, and the high of the gap is here, the low of the gap is here, consequent encroachment is here. Hits it perfectly to the pip, rallies again, break again in market structure, comes back down, bullish order block, fair value gap closure, news hits the wires, and boom, it takes off. And again, what news was it? Here's our economic calendar. Again, we had CPI today, and we had Bank of Canada monetary policy report and rate statement and overnight rate at 10 o'clock. That's the big hitter here. And then 11:15, we had a press conference. So you can see that here. All that London data here, it looks skewed because of the big movement here. But that's why I gave you the London session, so you can get a greater appreciation for all of the movement in here. Then we had a continuation dropping into the New York session, and really explosive run higher. And above those relative equal highs, we found some support, came back to the 131 big figure. We ran through the 130 big figure. Again, protocol is what? We could look for as much as 40 pips, if not 50, on big news like Fed news, rate announcements, and things of that nature. And we got that here. It ran all the way up into the 130.50 level and pretty much has hung around there. Hasn't done too much since then. Watch this level in here. If we get back down into the 130.20 level, they might recapitalize that and send it higher if it's going to go to those daily objectives as I outlined. And again, I don't have any confidence to stand on that right now because we're still in January. So really nice observation. We had something to really focus on and watch today, and pretty explosive in terms of price action. That is going to do it for this one. I will touch base with you again by way of Twitter tomorrow, I'm certain. I'll have a price action lesson for you this weekend in the weekend review of the ICT mentorship. Until then, I wish good luck, good trading, be safe.